Good morning. Today we're diving into a topic that might seem far removed from your daily routine, but in reality, it's woven into the fabric of our everyday lives. The stock market. Stock markets might seem distant, but their ups and downs impact us all, whether we realize it or not. Every tick, upward or downward, can set off a chain reaction that reaches far beyond the trading floor. When markets rise, businesses have more confidence to invest, expand, and hire. Jobs become more secure, and pensions or retirement funds often increase in value, giving people more peace of mind about their future. Your retirement savings, if invested, are tied to these markets, so their performance shapes your future. Even if you don't follow the stock market closely, your financial well-being is connected to its health. It's not just about traders or big investors. It's about millions of ordinary people's financial well-being. The ripple effects of market changes touch families, workers, and communities everywhere. Market movements reflect the health of our economy, affecting prices in shops, the availability of jobs, and even the interest rates on loans and mortgages. When markets are strong, confidence grows. When they fall, uncertainty can spread. Global events, trade deals, policy changes, even weather, can ripple through markets and reach our daily lives. A single headline can shift markets and, in turn, influence our own financial decisions. Understanding these connections helps us make sense of the news and our own finances. By staying informed, we can make smarter choices about saving, investing, and spending. What happens in distant markets can influence your job, your savings, and your cost of living. Even if you never buy a single share, the market's pulse can be felt in your wallet and your workplace. So, as we explore today's financial headlines, remember, these stories are about all of us. The stock market isn't just numbers, it's a reflection of hopes, fears, and opportunities worldwide. The stock market is a window into the world's economic pulse and your own future. By understanding its movements, you gain insight into the forces shaping your life and the world around you. European markets are buzzing with optimism after a historic EU-India free trade agreement. Nearly 2 decades in the making, this deal connects economies representing a quarter of global output and a fifth of the world's population. It removes most tariffs, making goods cheaper and opening vast new markets for businesses on both sides. Last year, EU-India trade was already worth $136.5 billion. Now, that's set to grow. European cars and Indian textiles will move more freely, boosting jobs and choices for consumers. This partnership signals cooperation in a tense global trade environment. Investors are responding. Germany's DAX and France's CAC 40 are climbing. It's a game changer for business, jobs, and economic growth. While Europe celebrates a wave of optimism in its markets, global eyes turn to the US Federal Reserve's highly anticipated policy meeting, a pivotal event that can shift the direction of economies worldwide. The Fed's decisions on interest rates ripple across continents, shaping not only borrowing costs and investment strategies, but also influencing the confidence of businesses and consumers everywhere. After 3 consecutive rate cuts, most experts now expect the Fed to pause, a move that reflects the remarkable resilience of the US economy, with robust growth and historically low unemployment rates. US interest rates set the tone for global finance. When they're low, borrowing is cheaper everywhere, fueling expansion from small businesses to multinational corporations. A pause signals confidence in the economy's momentum, but also a note of caution as inflation remains stubbornly above the Fed's target, raising concerns about future price stability. The Fed must carefully balance the need for continued growth with its responsibility to keep prices stable, a delicate act watched by policymakers and investors alike. Investors are watching for any hint about future rate moves, passing every statement and gesture for clues about what's next. Even a single comment from the Fed's chair can sway markets for weeks, triggering rallies or sell-offs that echo around the globe. These decisions affect everything from the interest rates on mortgages for families buying their first home, to the cost of business loans that help companies expand, hire, and innovate, both in the US and abroad. The world's largest economy sets the pace for global markets, and its central bank's choices reverberate through every financial center. Today's meeting is about more than just numbers. It's about stability, confidence, and the path forward for millions of people and businesses. The outcome will shape economic sentiment far beyond US borders. Stay tuned. Every word, every signal, and every decision from the Fed matters more than ever. Not all trade news is positive. Sometimes headlines signal trouble brewing beneath the surface. Tensions are rising from the US, where policymakers are taking a hard stance on international agreements. President Trump just raised tariffs on South Korean goods, citing broken agreements. Tariffs make imports pricier and can spark retaliation from trading partners. The goal is to protect local industries and encourage domestic production. But this approach risks higher costs for consumers, who may see everyday goods become more expensive. The US also threatened Canada with massive tariffs, putting pressure on its northern neighbor to reconsider its trade alliances. If Canada signs a trade deal with China, it could face economic consequences from the US, making every negotiation a high-stakes gamble. These moves highlight the fragile state of global trade, where every decision can send shockwaves across continents. The risks of protectionism are real. Factories can close, jobs can be lost, and economies can slow down. For businesses, sudden policy shifts create uncertainty and disrupt supply chains, making it harder to plan for the future. Investors dislike unpredictability. One announcement can shake entire industries, causing stock prices to swing wildly in a matter of minutes. While the EU-India deal opens doors for new partnerships and growth, US actions close others, creating a patchwork of opportunity and challenge. The global trade landscape is a mix of opportunity and risk, where fortunes can change overnight. Markets react quickly to every twist in this ongoing story, reminding us that in today's world, a single policy shift can ripple across the globe in an instant. There's more good news from Europe. Car sales are up for the third straight year. New registrations rose 2.4%, reaching 13.3 million vehicles. Strong sales mean more jobs and confidence in the economy. Major manufacturers in Germany, France, and Italy benefit, supporting millions of workers. Growth in this key industry, plus new trade opportunities, brightens Europe's outlook. It's a sign that, despite global challenges, the real economy is resilient. It's earnings season, time for Europe's biggest companies to reveal their results. Sandvik saw profits rise despite lower revenue, signaling industrial strength. HMS Networks posted a 64% jump in operating profit, showing efficiency and demand. Vår Energy boosted oil production by 43%, overcoming past setbacks. All eyes are on LVMH's results, a key indicator for the luxury sector and wealthy consumers. Chinese giant Anta Sports is buying a major stake in Puma, showing global confidence in European brands. Cross-border investments are reshaping industries and boosting market optimism. These results paint a picture of resilience and opportunity in Europe. In the US, earnings season is in full swing, with over 90 S&P 500 companies reporting. 3/4 have beaten profit expectations, signaling strong corporate health. Boeing and American Airlines results will reveal if global travel is rebounding. Tech giants Meta, Tesla, and Microsoft report next, with investors watching innovation and growth. Apple's results on Thursday are a global event. Its sales set the tone for the tech sector. Strong numbers mean confidence in consumer spending and economic momentum. These reports shape market sentiment worldwide. The world is watching America's corporate giants for clues about the future. Oil prices dipped slightly after last week's gains, with Brent crude at $64.46 a barrel. A severe US winter storm shut down up to 2 million barrels per day, 15% of US output. Less supply supports prices, showing how weather and events quickly impact markets. Economic growth and trade deals boost demand, while disruptions tighten supply. The market is balancing optimism with caution. Traders are watching how fast US production recovers and if global demand keeps rising. Oil's price remains a key signal for the world economy. So, what does all this mean for you? It's about confidence and cost. Trade deals and strong company results boost economic confidence, leading to more jobs and investment. Rising markets can grow your pension or savings if you're invested. Central bank decisions and oil prices affect your mortgage, loans, and energy bills. Supply disruptions can make prices volatile, squeezing household budgets. Every global event, from trade agreements to company profits, shapes your financial reality. Understanding these links helps you make better decisions. Today's news points to growth and stability. In a world of uncertainty, that's good news for everyone. Stay informed, your wallet depends on it.